One thing that is always difficult when it comes to investing is knowing when there's a good opportunity in a stock to buy. Now, of course, I don't have any magic predictor that's going to tell you exactly when a stock goes up or down. However, I do have quite a few tips, maybe what you should be looking for in a stock that might be a good opportunity. And of course, I'm using Qualcomm as an example, and the reason the first one I'm using is hype. Hype can bring you up, bring you down, and oftentimes when a stock is having good earnings, and is not necessarily going up, maybe it's going down, maybe it's going sideways, that can be a good indicator that, hey, eventually the stock is going to recover because people are going to notice, hey, this thing's growing relatively fast. Now, this is a method that isn't going to necessarily give you immediate returns. You may, if like I said, this is more of an investing approach rather than a trading approach. If you're doing a trading approach, you may want to get something that's been low, is starting to catch some momentum to the upside. Not that Qualcomm's going down. It's basically running sideways. It basically has since what? November, October, somewhere in that range. So, but with Qualcomm specifically, they've been having good earnings and they're just running sideways. I think eventually, assuming the company is having good earnings in the future, which they should, they guided for 14%, something like that. Eventually, the market's going to catch on. It's also one that's relatively cheap. I just did a video on them specifically, so that's why I like it. You're cheap, you're growing, and it's not really going up too much. I think in the long term, there's a good chance you're going to make a lot of money. There's not a lot of downside. The only issue is you could run sideways for a while. But this is a good opportunity to buy for the long term. I would be surprised if in a year from now it was still in this range unless it already had a run up and fall down. Kind of like what we saw from March, April 2024, he ran all the way up from 170, basically where we're at now, to 227, and then back down again. It was just hype. That's another good opportunity to sell, is when hype's going up. However, if hype is tied to earnings, and sometimes those earnings happen, you could miss a lot of growth. Something like an Nvidia, which is why you want to be careful that the hype is mainly off of, that's what, like I said, hype and not growth. If you're smashing earnings and you're growing a lot different than you haven't really smashed earnings, but people expect you to. So hype is a good one to trade, sell, buy off of. At least marginally. Maybe you don't have to sell or buy everything, but it's a good indicator. Many of you who have watched my channel a lot before, or even just a little bit, you might have a good idea that I like TSM. I really, really like TSM. I've made numerous videos already on this channel. This channel hasn't been around that long. I've owned them for a number of years. I understand, but I just really like TSM. And this is the second point, and it actually goes off of a Warren Buffett quote. It's better to buy a great company at a fair price than a fair company at a great price. Something along those lines. TSM, in my opinion, is a great company. They've been successful 225% over the last 5 years. They've done really well over the last year or so. Going back to 2015, about a decade ago, they're up from 24 a share price, 22. Even later that year, 29, or in that 20 to 19 range. Just a phenomenal performance. But I like the stock. I think it's a great stock. I want to buy into great companies and hold them long term. As investors, long-term investors, totally reasonable to do this. Now, is it the perfect opportunity to buy TSM? No. Will it be cheaper in the future? Absolutely. But it might be a year, it might be 2 years, and that amazing price might be at $250 a share after it's normally $400 in 3, 4, 5 years. Who knows? Not saying that's going to happen, but there's a good chance. I want to own great companies, and for you guys, of course, not financial advice, I want you guys to own great companies as well. Whatever you think is a great company. It doesn't have to be the perfect buying opportunity. It just doesn't. Maybe you like Apple. Maybe you love Nvidia. Maybe you like Coca-Cola. Whatever it may be. Buy and invest in those companies in the long term, and maybe you get a dud or two. Look at, okay, I thought this company was going to do this. It didn't. Let me decide why. Let me dig into the numbers. What did I miss? Because maybe you are missing over and over and over, but generally, just buying great companies, buying in at great companies, not at the perfect time, but just buying into them. And if they drop significantly, you buy in at TSM at 118, it drops to 50, 60, buy some more. Who cares, right? Unless, they were having bad earnings, but if the company's just doing terrible year after year after year, that's a different thing. But generally, if the company's doing well, things like that, don't worry about it. There are two last ideas I want to talk about, and both can be summarized using Duke's Energy. Now, maybe you're sitting here like, why are you talking about Duke's Energy? Who cares? Utility companies, right? Not the most entertaining. That's the wrong word. Exciting, maybe. 3.5% dividend, you're going to match inflation, whatever it may be, with share price performance. But the utility industry, in my opinion, when you think about it, data centers, there's going to be more and more data centers. They use so much energy. I mean, you even see companies like Amazon, I think it was Amazon, they're like, hey, can we make nuclear energy because we don't want to like burn a bunch of coal and stuff, but we literally are not going to have enough energy for how much energy we need for these data centers, right? So I think utility industry might do well. Industries you think are going to do well in the future, you should buy into them. That might seem super straightforward, but sometimes you have to just pull the frickin' trigger. If you think data centers are going to do well, buy some data center stocks. Buy a bunch of them. Put a little bit in a bunch, and you'll probably do well. Find a ETF. I'm sure there's plenty of ETFs with them. They might suck, but you can find them, right? So industries you believe in, semiconductors, industries you believe in, those are some that I believe in personally. Invest in them. Pull the trigger, whatever it may be. Maybe you really believe in pharmaceuticals are going to develop a lot of drugs. Do that. The last one is a little bit more unorthodox. However, it's pretty straightforward, and if you disagree with me, whatever. So another pattern you can see with something like a utility company that's pretty clear is rates. They have a lot of debt, so you're often going to see them go up and down with rates. So when it comes to rates, they went down in 2023 because rates didn't drop as fast as we thought they were going to be. I bought into quite a few companies during this time period because I didn't mind the dividend, and I'm like, rates are going to drop eventually. When they did start dropping, these companies went up. And then there's been a lot less optimism that rates are going to continue. Now, you don't see it as clearly in Dukes. Let's pull up Vici real quick. It's a little bit clearer here. We can see with this stock, yeah, it's actually not. Let's go to the year. Yeah, so we can see this is a little bit more obvious. So they were low, and then they shot up. Oh, rates are dropping, and then they shot back down again. You can see that. So when something like rates, and you know, right when rates start dropping, the company's going to shoot right back up again. Yes, it may take a year. It may take 2 freaking years, but that is 3%, whatever you're getting, 6% in Vici's case. And you know it's going to shoot up once people are excited about rates dropping. I literally did this. I bought, I think, like in this range, below 27, 28. When it shot back up to 33, I sold a little bit in that range. Maybe it was closer to 32. Who cares? Literally at one of these, I almost timed it exactly perfectly. I think I got in under 28 and a half. And then it immediately basically shot up to 30. Whatever it may be. You don't have to exactly follow that principle. When stocks and companies have short-term volatility, they're down because rates are, high, and you're like, well, this is a stable company. They're going to be doing fine no matter what rates are doing. And then it's going to shoot right back up immediately when people get excited about rates going in. Now, it's a very specific example. Maybe it's a stock. It's like, oh, people are really worried about tariffs, and there's a big tariff thing. I don't know. Tariffs could be really big, so who knows? But just something you think is short-term. Cocoa prices with Hershey's. Hershey's is getting slaughtered because of cocoa prices. I'm going to do a video on this in the future. Eventually, cocoa prices are going to go up, or they're not going to be as bad, or it's going to be priced and they're going to get used to it, and people aren't going to worry about it as much. But right now, people are scared to death of cocoa prices being so high. Something like that. Now, obviously, every scenario is unique. You have to weigh the risks, understand it pretty well, but this is another way you can buy. If you're patient and you're willing to hold something that is stable, but people are just out on, you can make a lot of money when people are not believing in a specific thing that you think is going to be fine. Because if everyone agreed with you, if everyone thought it was going to do amazing, it wouldn't be low. But you can't get those insane returns like during a COVID from you bought in Vici at 12 and now it's at 33. You can't get that unless you're going against the grain. So find something going against the grain you believe in. And don't go all in on it, but take a bet and see what happens, right? So anyways, that's all I really got for this video. If you enjoyed, I appreciate if you like and subscribe. I do daily stock content on this channel. I appreciate all of you for watching. I'll catch you next time.